I am your host, John Casman, and I'm super excited to bring you guys another great episode. Today, we are talking to Georgy Marrero. Georgy, how you doing today?
I'm doing great, John. Thank you.
Excellent, excellent. Hey, why don't you take our listeners and give us a little bit of background? Take 1 or 2 minutes and give us some feedback on who you are.
Yeah, absolutely. Well, first of all, I'm super excited to be here, John. But my background is a mix between tech and real estate. Um, I have been in the tech space since I was a little kid. Started coding when I was around 9 years old, 9 or 10. Um, and I'm originally from the Dominican Republic. So I grew up in this small town called San Pedro de Macorís. It's a baseball town. Um, I play baseball, but honestly, I didn't like it. So I was just coding and reading business books. Uh, and one, in some way, I ended up in California, just tracking this down, tracking that path of tech startups and just being in the best tech companies. And we can go more into the story, but I ended up in Meta. First, Amazon had my own startup, and then in Meta, and I was doing well. But then I realized that something was off. That's when I started investing in real estate, and I didn't start with multifamily, like probably a lot of the listeners. I started with single family, and then I realized something feels off again, and then I started doing more multifamily, more commercial, even industrial self storages, and a lot of land development. And that's where I'm at right now. And it's a lot of fun, honestly.
Yeah, man, you got a very interesting background, right? You talked about being interested in tech since you were a kid and using that to get you to California, working for Meta, working with Amazon when they bought you out, and from there started to invest in real estate. And as you started with single family houses, like many listeners do, you realized something felt a little bit off, moved over to commercial, and that's been your focus ever since. Let's go back to childhood, man. I mean, I'm sitting here with two kids around that age in the other room. What made you so curious and interested in coding and tech at that age?
Yeah, I think that's the word, curiosity. But it's not so much what made me curious. I think it was also the environment that I was in. I was fortunate enough to have uh, my parents, although they weren't together at the time. My dad, visionary. He bought a computer for me. It's one of the only gifts that he bought me. But he did his part there. He bought me that computer when I was 7, and my mother put internet when I was 8, and she was going against all her friends' advice. Her friends were telling her, the internet is bad. Bad things can happen. Just beware. He's too young. But she saw me tinkering with math, and the teachers telling, "Hey, your kid knows a lot of math, and he's very smart." Um, and then the next step there was, a mother who just gave me the freedom to explore and be curious. So um, I want to say, John, that a lot of stars aligned for me to start coding at that age. It was a moment in time where coding information was readily available. Uh, I didn't have to pay for a boot camp or anything like that, and I had a lot of time on my hands. So as curious as I was just learning, falling on my face, and by the age of 14, I ended up with about 14 pieces of software online with over 1,000 users. But mind you, I didn't know what I was doing. I thought this was a hobby, this was a game, and I was just playing it.
Yeah, man, I appreciate you sharing that. Right, just curiosity. That's the first spark. It's putting the tools there, being curious. You kind of did a lot of driving yourself with learning coding, and you mentioned being in a baseball town, but that really wasn't your passion. You enjoy more on the tech side and coding, and I think that's awesome to hear. Talk to us about the career side because you mentioned being in tech. You were building up these businesses. You end up moving to California. Why not just focus on tech and making money in tech and never touching real estate and rentals and being a landlord? Like, why not just focus on the tech world?
Yeah. So, I fast forward when I was around 17, I had to make a decision about what I was going to do with my life. And I didn't even know real estate at the time. But I did read two books. One of them was Robert Kiyosaki's Rich Dad Poor Dad, and the other one was Napoleon Hill's Think and Grow Rich. I would say that Kiyosaki's book, it introduced me to real estate, but the real takeaway at the time was that time was more important than money. I didn't understand it yet because I wasn't trading my time for money or anything like that. I didn't even have money at the time. Um, but the other book, was more applicable at the time because it taught me that anything is possible if you put your mind, soul, and heart to it. So, I put the Robert Kiyosaki book on my back pocket, and I took Napoleon Hill's um, teaching, and I said no to all the full ride scholarships that I had in the Dominican Republic to work on technology, and I really wanted to learn from the best. And that's when I decided to go to California. So as a kid, I was on a mission. I said, I know how to code, but I want to learn from the best people because I think that's my calling right now, at least for the next 5, maybe 10 years, I said. And so I did. So I didn't touch real estate. I listened to a few podcasts, but I was focused on the tech route. That got me to a community college in Southern California called Orange Coast College, where I started building programming clubs, helping the community, and that got me full ride scholarship into Berkeley, the University of Berkeley in Northern California. And that's when I started focusing only on graduate level AI courses. I was also a bit resented, I'll say, John, because when I was a teenager, I used to do all the homework before getting at home, and I did all the math, and I used to ask my teachers, can you teach me more? Right? I'm going to this math Olympiads. I need somebody to train me. And they used to tell me, like, you know more math than I do. I can't help you. So I, when I was 17, I decided, what's the hardest thing I can study? And that aligns with my interest. And that was AI at the time. So this was more than a decade ago, right? But AI was the thing that was the hardest thing. So when I got to Berkeley, I focused on that coursework and did the startup thing and raised capital and then worked on big tech, and I got there. But I don't know if it's a Latin American thing. The first thing I did when I got money for my job is I bought a house for my grandmother back home in the Dominican Republic, in that same hometown of San Pedro de Macorís. And before buying it, as a technical person, I had to underwrite it. So I had to learn how to underwrite it. My idea was, I'm buying this house, but I really want to make sure that if I buy it, I am doing a good buy. I'm not buying something that doesn't have an exit later on. That if for some reason grandma doesn't want it, then I could have an exit. So I learned the game and I bought the property. It was unfinished. The previous owners ran out of money while they were building it. So I got in and I hired one of my engineer friends who studied with me, and he knew how to do the rehab and just finish and get the CO, so the certificate of occupancy. And and so I did. I went on this journey. I think it was like 4 to 5 months, and we were done. I hand the keys to my grandmother. I tell her, this is yours, and she didn't move in it. She didn't want it. I don't know if I jinxed it.
Wow.
um,
Why did she
but
want it?
oh man, it's a longer story, but she really liked her old house, and this
She
was a
was
house I
happier
lived
where she
in.
was.
She was
Yeah.
happy, but it wasn't. She needed an upgrade. I'll tell you. And I grew up in that house. I lived there from age 4 to around 8. So I kind of understood her. And what I did is I put it for sale by owner. And less than a month, I got a call. I sold it. I counted the profit, and I made 20%. And that was end to end about 7 months. And I thought, okay, this wasn't bad. Maybe I can do this again. And so I did. I did it again and I did it again. While I was at Meta, I started building the single family home portfolio, let's call it.
Yep.
Um, and fast forward as I moved more into the commercial realm, I I felt like it was time to leave the corporate world. That's what really happened. Just a lot of different situations align, and I felt really good with how the finances were looking on the real estate side. So I decided I could continue going through the ranks in this corporate world in big tech, but I didn't really like what I saw when I looked upwards, right? Like a few levels above it, it just never seemed the people there, quite honestly, never seemed completely happy with what they were doing, you know. And when I asked them behind closed doors, they were doing it because of the money. So I made the trade off. I wanted my peace. I wanted my happiness. I wanted to be in Dominican Republic if I wanted to. I wanted to be drinking coffee with my grandmothers if I wanted to. So that's when I made the leap.
Georgia, I appreciate you sharing that, man. It's a great story, and I love the context, man. So, first of all, you talked about, really locking in on the tech side, the coding side, wanting to go to some great schools, moving to California, learning more about coding and AI, and almost, not being challenged enough. So that led you down this path of AI 10 years ago, where hey, you're going to learn this thing. You're doing well in tech. You make enough money to buy grandma a house, build it out, hand her the keys, and she says, "No, thank you." So instead, you end up selling that property, and the light bulb kind of went off that, hey, I actually made some money there. That worked out well. Maybe I can do this again. So you do that a couple more times, and then you have this realization that your career in big tech, as you look out, you recognize, man, this may not be what I want to do long term. And it's interesting because that's kind of what happened with me. I was in corporate America in the automotive industry doing advertising and marketing, and we went through bankruptcy. And I remember looking around at my boss's boss, his boss, her boss, and I'm like, everybody's miserable. And you could tell it on their face. I mean, this didn't require behind the doors. You could look at how they walked in the office, and I was like, man, do you want 20 more years of this? Like, sure, you get a title. I know you make a lot of money, but man, they look miserable. And I remember there's one guy who did not look miserable. He looked happy, almost skipping into work every day. And I remember I took him to coffee, and I said his name was Jack. I'm like, Jack, hey man, everybody else over here looks super stressed, and you look happy. How? And he kind of chuckled a little bit. Jack was an older dude, and Jack had made a lot of money in real estate, and he owned some land out in Colorado and some properties, and some of that was known to me and others, but some of it wasn't. And as he just started talking and sharing more, I realized like, oh, this guy works here because he genuinely enjoys the work. Most people here work here because they got to pay the bills, right? And it was just such a big difference in the tone, the mentality, the energy. And it kind of gave me some guidance to say, you know what? Make sure you're focused on the work you want to do and not just a paycheck, because it's easy to get caught up, right? Especially in the tech world, I'd imagine, where those checks get bigger and bigger. And now you've got those golden handcuffs. And yeah, you want to do something different, but when you're making that much money, it's like hard to walk away from it. So it sounds like you kind of went through a similar journey, recognized it early enough to be making good money, but still walk away, but not to the point where those handcuffs were tight around the wrist. Is that fair to say?
Well, yes, Jan, our stories have a lot of similarities. I'm trying to think who was my Jack in my story as well.
There's
uh,
always a
yeah,
Jack, right?
yeah, there's always a Jack. Absolutely. Um, I think the handcuffs were very tight, John. I'll be honest. But one thing that I did before accepting the offer at Meta, I wrote these letters to myself. And me and my best friend, he went to Apple, I went to Meta, and we both had our own tech startups at the time, and we were doing good. We wrote this letter to ourselves, so in the future, 2 years in the future, and I will paraphrase because I can't remember what we wrote. It was something about like, "Hey man, remember your dreams. Remember this is temporary. You're just here for 2 years, but remember that you have bigger goals. And so what I'm trying to say is I had or I knew that I needed to leave, but I knew it was gonna get tighter and tighter and tighter. But it was very tight, but it was gonna continue getting tighter. Um, I opened the letter 2 years later. Quite honestly, I put it away. I put it away, and a year later, I opened it again, and then I looked at the bank account, and then I put it away again, and that happened for a few times until the moment that I was like, you know what, stocks will go down, will go up and down again, and I'll still be here. I'll still be here, right? Um, so one clarification as well, John, is that I still do tech. It's very hard to escape it, but now it's on my terms,
Yeah.
right? Because
Yeah.
the a 20 years experience doing tech, it's very hard to go cold turkey and never do it again, especially with the AI revolution right now. But with what I learned in corporate, bringing that outside to the world of multifamily and commercial real estate, that gives us an edge, and that's one of the edges that I'm exploiting right now. But it's like you said, it's much better when you are doing things because you want to, just like Jack. He went to work because he just wanted to.
Yeah. Yeah. George, let's jump into that, right? So right now, talk to us about your portfolio. And I definitely want to talk about how you're incorporating AI, but let's start with the portfolio first. What do you invest in? What does that portfolio look like?
Yeah. So the portfolio is a mix. We have done about 20 acquisitions so far. We are undergoing right now about four other. Right now, we're actively in the due diligence phase. Uh, the two latest acquisitions that we've done was multifamily in Texas, and a senior living home, assisted living facility in Kentucky. That's one is 36 unit, the other one is 84 unit. Um, I'm currently doing some development, luxury villa development. Today, I just got one of the renders of the biggest model, which looks really, really amazing. Um, and as well, I have some land and we're working on an industrial park. I do a mix between the US, very selective on the state, even more so on the sub market. We have these 21 point checks that now I've integrated on an AI, which is as simple as giving it a zip code and understanding all of the metrics that I want on a particular sub market before proceeding. And so that's the level of rigor that we use when we're investing in the US. And I also have in the Dominican Republic deals. Like these development deals are in the Dominican Republic because the country lends itself better for development deals than just the traditional buy something that's cash flowing and then do some value add. That doesn't work that well here. Other than that, you know, multifamily, self storages, more land where we're co-developing with big players, um, more multifamily.
I heard you say you've got some multifamily in Texas, assisted living facility in Kentucky. You got some new development deals you're working on, both in the U.S. and in the Dominican Republic. And in the U.S., you've got select states you focused on in markets, and you use a 21-point checklist to identify whether or not a market is right for you. Lots of strategies there, right? Both on the asset class, the markets, countries. So there's a lot of different inputs coming your way, and obviously, with the advancements made in technology and AI, you're probably able to be savvy and navigate these areas better than what you could 5, 10 years ago. At a high level, what do you look across all of your projects when you look at the markets themselves? Give us just like your initial glance. What makes it an easy no for you to say nope, that's off, we're not going to do anything there, versus absolutely yes? Like, what are the things that are bright and clear as day yes, or clear as day no for you?
Yeah, absolutely. So, first thing is operator, then market, and then the asset itself. And it can be an amazing project in paper, but if I do not know the person that's going to be running the day-to-day show, um, or they're not experienced, then I'm out, you know. And once that's done, maybe it's somebody that I've worked with in the past that has some reputation that I've uh, met them multiple times and I've seen their work and I've vetted their work through references, or one of my partners that I really trust have done the work. Then it's about market even before the asset. So what I look for in a market first is it going to give me headaches? So that disqualifies the bad locations, the locations with a lot of crime, the locations with a very low income, where it's going to be very, very hard. Delinquency may be high, right? All of those. Um, I usually don't like markets where there's a huge supply incoming, and I'm holding something, or even worse, developing something, just because of the effect that that has both on rent and prices on sale. Um, I do like to see affordability if I have a business plan, but let's say income is not growing as fast as U.S. median or the state median, then that's concerning because that affects the growth, and that's one of the most important inputs that you're counting on. And so it has to be supported today, and it has also to be supported tomorrow. And then when it comes to the asset, I heard at the beginning that somebody said that as you grow older, you take less debt. I think that's happening. I think that is one of those, like, tricky, can be a headache.
Yeah.
So uh, I I don't care as much about bottom line return as I care about the protection and security of my capital and my investors' capital. So having the right debt, it's not gonna balloon before the time is
Yeah.
due, before my business plan. Uh, Even I need to assume that my business plan is gonna take probably 2x the amount of time. Like, so all of those metrics, I look into that. So nothing too aggressive. I like, if I'm buying land, I can't buy it at market price. It has to be lower. So everything at a discount, even if it's a cash flowing property today, you know, I go beyond the common knowledge of don't buy on pro forma. I go buy at a discount. Like, not only not pro forma, but today, what's the discount today if I'm buying it?
Yeah. George, let me recap some of that, right? So you're talking really about, first of all, understand the operator first and foremost, then the market, and then you want to get into the actual property or the deal. And I think it's a great framework, right? It's a smart way of looking at it, because you want to make sure you're investing with the right people that can actually execute. And the market's critical. You talked about, the market not be giving you a headache, and I think too often that gets overlooked, because people just go straight for the returns and, I get a 21% IRR. It's like, on paper, like, do you know what it takes to get a 21% IRR and the kind of, returns you need, and the kind of, things in the environment that have to line up, because it's not easy to execute, especially in a higher interest rate environment, especially when the economy is softening and people don't have as much liquid cash. It becomes harder and harder to really hit those numbers. So you talked about really thinking about it from a protection standpoint. Instead of focusing on how much you can make, you're looking at it to say, hey, what's the floor on this deal? How are we protecting our downside? And then we could talk about how much money we can make. But I want to make sure that we're investing in deals where we are adjusting the risk appropriately. And then on the land slide, you talk about investing where you can get a discount, not buying at face value, but where are you getting the discount? Same with your value add deals. Where are you getting the discount? So I think those are great things for us to think about and keep in mind. It sounds like you do a little bit of different strategies, right? Where you are maybe buying the land and you're partnering with other developers. Are you working with other operators and sponsors as well on the multifamily side? Or are you guys kind of managing and leading your deals there?
Yeah. So yeah, that's a great summary, John. We employ different strategies. Sometimes we develop ourselves. Sometimes we may enlist other co-developers to develop parts. Um, and when it comes to the more traditional deals that are not development, things that are already cash flowing, have a core team. And the core team, we do almost everything together. If we are uh, putting the EMD, if a deal comes to one of us, then we share it between us and we make a decision. I think having, you know, three pair of eyes is better than just one. And we will split the EMD, sign the loan together, raise the capital together, uh, uh, hire an operator and interview them and assign them, or one of us, if we're closer to the asset, then we may do that. Um, yeah, that's currently the strategy. But more and more, we are trying to grow, vertically integrated. It just makes sense with in line with protecting the downside. When you have that visibility and control over all of the functions, it's much better. You sleep better at night. So that means perhaps, uh, if we need a land developer for the horizontal phase of a development project, that having that person in house and having just a pipeline of projects so they can take, and giving them equity and all of that, property management as well. So that's one of the areas, particularly in the Dominican Republic, that we entered, and we already are growing. Um, we have dozens of units right now in the pipeline that we're going to um, gonna take soon. But it's all in line. Like, the goal is to be vertically integrated, but I don't think we'll ever stop partnering with people, especially co-GPs, because it's a great way to give back and to uh, do an apprenticeship for other people. I employ that. There's a lot of people that are getting started. They're trying to raise capital, for instance, which I think is one of the best ways to get started. And bringing them into a deal, giving them that spot, and seeing their growth is also very nice. So I don't think we'll ever stop partnering with people, even if we're vertically integrated.
Yeah, I appreciate you sharing that, right? Lots of different ways to structure deals, to partner, work together, especially on the development side, because there's so many moving pieces there, but recognize the value. Let's talk about how you are using tech and AI in your business, right? Because in a way, you have an unfair advantage, which, by the way, as investors, you always want that, right? You want something that gives you a leg up on your competition, man, to find these deals, to execute on these deals, but there should be something that gives you a leg up, and for you, that tech background, I'm sure, comes in handy. How are you leveraging tech and AI for your business?
Yes. So, full disclosure, I have a company. Its name is Noomshot, and Noomshot is it first started as, I used to take my Fridays just for systems and AI work within the real estate, and I ended up building a lot of different technology that was very useful to me. And then I used to go to conferences and I used to speak about the technologies, and I used to get a lot of people ask me, hey Georgie, how can I use that thing? Where can I find it? So I, started Noomshot with some partners, and we have several clients that we're basically take over everything tech related. Sometimes the best solution is not AI. Sometimes it's so foundational, like just, having the right CRM, but the CRM that can integrate with AI in the future as AI evolves too. Or if it's a service company, like maybe property management or something else, having a similar, like, point of sale type of software that integrates with the CRM and integrates with the AI. And after having the foundation, then it's sprinkling all of those um, shiny features, like a AI receptionist or a AI appointment setter, or a maintenance call AI after hours, which are things that we have already developed. So that's Noomshot, and we do that very frequently, and we keep a pulse into what's the cutting edge for uh, all. I call it real estate entrepreneurs, which can be anywhere between investors, developers, but also business owners adjacent uh, or inside of real estate. When it comes to the investment, I use it a lot for capital raising.
Hmm.
That's one of the use cases. I think that was the first use case that I tried. Uh, this was, way before GPT 5, 4, or 3 even. And for capital raising, if you think about the the role of capital raising, it's really marketing and sales. There's some operations, but that's really investor relations. Marketing and sales is the crux of capital raising. So um, we have, content generators. I put many like dozens of content per week, but it's AI assisted, and also for the follow-ups, personalized follow-ups. It's a huge system. It starts from the meetings that I have with investors all the way to using the insights to create new content, but having also everything in autopilot so I can focus on the best things that I can do right now, which right now is working on some of the developments, uh, and also, speaking engagements and things like that. Underwriting, it has become more popular inside of my organization. Before, it wasn't that feasible, but the example of the market uh, underwriting that I mentioned that we use today, it used to take an analyst inside of our organization about 6 hours. Now it takes us 6 minutes to do a similar report. uh, and also filtering deals based on OMs and rent rolls and T12, just a pre-filter, not a full underwriting.
Yep.
We're not concerned about understanding what's the exact IRR on five different scenarios. We're concerned, is this good or not? With what confidence should I even take a look, or how should I stack rank them? Where should I start underwriting to put an offer? Right? So that it helps us a lot there as well. Asset management in certain parts, we're building for our own development operations. Security cameras that tells us the work that has been done in a day, and essentially certain things, like deliveries. Okay, there's material that arrived, and my expertise has always been computer vision. So it's natural for me to play a little bit with these AI for vision, and of course the property management. I My short term rental portfolio, I love it that I just received the 5 stars saying, "Oh, Georgie it did this." I was like, I don't know this person, but everything was completely automated from beginning to end, and that has been good. So we do it across uh, acquisitions, financing, and also asset management. But quite honestly, we're just getting started. There's so
Yeah,
much more
and I
that we
think
can do.
and that's most people, right? I mean, there's still so much to be untapped here when it comes into leveraging technology, especially multifamily, but in general for real estate investing. You covered three big areas there: raising capital, underwriting, and asset management. For raising capital, you mentioned that a little bit on the content strategy, right? Content creation, as well as personalized follow ups. And I want to just go through each of these separately and dig just a little bit deeper, right? So on the raising capital side, I had a fascinating conversation with another person just 2 weeks ago, and they told me that they have created a custom AI agent that handles their capital raising on their behalf. And they've trained it with hours of investor calls and all these documents to help educate this agent. And now this agent is the one that's doing those investor calls, answering questions, getting the commitments, which I just found fascinating because I recall a couple of years ago, me and, as I talked to other peers, that was the one role we were reluctant to ever let go, right? That's the personal relationship with a prospective investor. It just felt crazy to allow someone else to even have a conversation with those individuals. And now we're hearing that these AI agents are leading those discussions, which blows my mind. Um, Talking about your take, obviously you come from that tech world, so you're probably a little more like, open to it than many others, but it still seems like a stretch to me just to see how far technology has come in the capital raising landscape.
Yeah, I think it's inevitable that that's going to happen. But we also have to be very careful. If you do not design and architect what you're trying to automate um, in a way that keeps the human touch, then you lose your edge. Because the reason one of my investors want to do business with me, it's not because of the asset, it's not because of the name of my company, it's because it's me, right? And you don't want to become this huge corporation that front facing robots are talking to people, and then you never know what's going on. So it has to be done with tact. If you are building an agent, you need to embed inside of the agent that what your tone style, what are the things that you're really would say, and to hand you over the conversation whenever it's not completely sure of what it should say. A lot of conversations are very um, you know, repeatable, and it's always the same thing from the very beginning until, hey, here's the booking link. But some of them are not. Some people want to actually talk to you and ask you, what do you think about this asset type? And what do you think about this other asset type? And before they even hop on a call with you. Um, so yeah, another one pro tip here is you can make your job easier in the conversation stage and the sales stage if you pour more effort into marketing. And this is the idea of that if you do a good job at preemptively answering a lot of the common questions in the marketing that you're putting, then the conversations is as simple as, can we get on a call? I'm ready, and I got this much capital to do business with you. And then you can hop on the call, and then just take it from there.
Georgia, there's two things you hit on. One is just process, right? Making sure you're answering questions so you're getting ahead of the things that people will need to learn about or talk about so that they're informed. They're further along that journey when they are ready to talk. They've already done their research, they have most of their questions answered and ready to go. But I think the more important thing was the human element, and more importantly, you. At the end of the day, we do business with people, even large corporations. Like that person who's a salesperson or the person in charge of materials, that's the person. We literally just did this. My wife, we're working through a new business we're launching, and we had to hire someone to do payroll. And she's like, well, I really like this woman at that company, even though they're like almost twice as much. So she went back to her and said, hey, listen, you guys came in over everybody. Can you work with me? And the woman that came down and actually matched someone else. So she went with her. It had
Yeah,
nothing to do with the big company that was behind her. It was her. She enjoyed her conversation with her. She felt connected to her, and she wanted to work with her. And that's the part that the AI agents can't really replace. And if they do, then all of us become obsolete, right? Because that means we have no value as individuals or as people who know how to connect, relate, and build connections. And that's really, really key. So that's the thing that we can't lose. You started to talk about, we talked about raising capital on the underwriting side, where I do think there's a lot of applications here because underwriting. I don't know about you, man, but it takes a lot of work. You mentioned before, that process might take 6 hours. You guys have got it down to 6 minutes now. So this is an area where you really can comb through a ton of information and a ton of data and get to some direct answers on whether or not this is worth further pursuing relatively quickly. Can you just elaborate a little bit more on like how you're doing that? I know you mentioned taking a rent roll and financials and throwing, I don't know if you throw that into a custom GPT or what, but maybe just enlighten us a little bit on how you're able to use, technology and AI in particular to help you in the underwriting process.
yeah. So I think it starts. Everybody underwrites differently. Everybody has different skills at underwriting. Um, but it starts with a deep understanding of underwriting itself. Like, you know, what are the things that you're actually looking for? Because sure, you can be a completionist and do the entire underwriting, but then you're really looking at two numbers. That's all you care about. Like, I only care about these two numbers because as soon as that number goes above this or below this, I am out. It doesn't matter what happens, I am completely out, right? So with that understanding, you reduce the problem. You reduce a problem at what is that number? So if you find that, no, maybe it's DSCR. It really depends on the person, or yield on cost, or something completely different, right? I would caution against going into um, what would make my investor say yes. That's really a lazy way of looking at it because it's not your investors who should say yes. It's you first. Like have some backbone first, and then give it to the investors. So what are the non-negotiables for you? What's a deal that you wouldn't get behind, and then reduce the problem and understand what are all of the numbers that will lead to that particular number. So, um, just the DSCR, just to put an example, it would be really the loan, the debt service, and the NOI. And you probably want the DSCR today at takeover, right? And maybe you care about stabilization 18 months later, but there's no business in calculating 5 years later because if it doesn't work in year zero and month 18, then there's no nothing there. So, for example, it's that. Then go ahead and calculate. Just get all the inputs necessary to calculate NOI and debt service. So, um, sometimes you don't even need to calculate expenses. You don't need to go crazy getting quotes and having an AI caller call 14 insurance providers. No, you don't need to do any of that because you understand that based on the revenue and the debt service, you're going to be very far from that DSCR that you're trying to achieve, right? So those are little ways to hack it. And once you find the minimum calculations that you should do to filter out a deal, then you focus on making AI understand that. And in that, but it starts with your own clarity of the problem, and then instilling that into AI. It is smart, but you got to be a bit smarter than it in order to make it learn. And once you are at this stage, one of the issues that you may encounter is, well, I'm giving it instructions, but it's not understanding me very well because I can do it, but it cannot do it. And that's when you have a prompt issue. And that's when you need to speak or write clearly to the AI. You need to provide it good examples, structure the examples very well, enough context of what you're doing. Exactly what I said. Hey, you're not underwriting this completely, but I do care about DSCR. So that's all we're doing right now, right? That's all I want you to do. And once you get that answer, maybe give it to another model who's going to do the next thing, for instance. Um, so that's when you start into maybe custom GPT or going into the developer friendly GPT. There's one GPT that we use when we go to just the website that we all know, and then there's one that's for the developers, or you can give it system prompts and user prompts and agent prompts. So you will have to get a bit, roll up your sleeve and get a little dirty and basically teach it to do those things. And if you want to squeeze extra performance, that's when you start training and gathering data. So you do a fine tuning session on your AI, and that's essentially how we do it.
Yeah, I mean, listen, lots of steps there, right? And I mean, if somebody listening might have heard that and said, it's just easier if I do it, right? But it takes time, right? It's one of those things where you can invest a ton of time up front and it'll save you a tremendous amount of time on the back end. But for a lot of people, it's just hard to invest that time up front. So if you have the clarity to know what you're looking for Now you can train this thing just to look for that and help. Hey, all I need you to do is find me the ones that are worth my time, right? And I don't know about you, but when I first started investing, I would just underwrite everything that came my way, right? If the broker sent me a deal, I would underwrite it. And 45 minutes to an hour and a half, 2 hours later, I would realize this deal was way off. Like these guys were asking 5 million. I thought it was worth two, right? And I'm like, damn, that was a waste of 2 hours. So for me, it's like, how do I, you know, how do I compress that time frame? So at a minimum, I know, hey, this deal was never going to work from the jump. Save your 2 hours and let's find the ones that are at least going to get close enough where it's worth investing that time. And we've kind of developed our own thesis around that as well. But it starts with the clarity to find the patterns, to recognize what works. And I think that comes from, again, education. It's either from reps and doing this enough times. If you can get a coach or a mentor, get involved in some programs, a mastermind group. But you need to start developing some rule of thumbs so that you know what a deal looks like to you. And I love what you talked about, Georgie, because you didn't say, hey, if it's a 15% IRR or if it's a two equity multiple, you said you got to figure out what your metrics are. What do you want? That's going to be different for Georgie than it is for me. Yes, we can focus on investor returns, but the better way of doing this is understand what you are looking for as an investor, and then you use that to guide your conversations with your LPs. And DSCR might be a metric. There's so many others that you could tap into, but the more clear you are, the easier it's going to be to train that AI agent or whatever tool you're using, so that you can find what it is you're looking for that's worth it. Hey, we got a little bit of time left, and I want to ask this one here, right? Because you talked about raising capital, we talked about underwriting and filtering out deals. The last part you started to get at was the asset management side of it. And I love this because now you're talking about how you're tracking what's really happening through security cameras. And I'm sure there's a lot more you're doing with deliveries and things, or I'm sorry, with data and tracking and analyzing the data that's coming through your T12, your P&L reports. Talk to me more about just the asset management side and maybe some ideas that we can utilize today.
Yeah. So the two that I mentioned was, in a development project, um, there's a lot of trust that you have to place in the team. It's very easy for it to go bad if you don't have a pulse in the development. The construction risk. So with security cameras um, pointing towards the construction site, you can tell when people are working. You can measure the activity levels, and you can understand how many people went to the site at what time, and just get a report. And that's very useful because now you have that documentation right there, and you can pinpoint why things went south a particular week or month. I prefer weeks, but you can understand in a time frame when things are not going as expected. So that is one of them, and it can get more um, complex or specific when it comes to deliveries of material. Uh, were they being stored? Who access it last? You should have an inventory, regardless if you're doing construction. But here's the proof of the inventory right there, for instance. And you can count things as well. It doesn't always work that well, but um, it can give you some estimate in ballpark, especially with the level of AI that we have today. When it comes to um, you know a hotel or short-term rental, when there's a lot like in and out of tenants very frequently, I think this is when this the particular automations of guiding someone into their check-in process, guiding them in the checkout process, but also during their stay, making sure that they're serviced well, and frequently asked questions are responded with clarity, and also giving you as the asset manager uh, ideas of, we should probably set that before because they're asking on their second day, how do I turn the water heater, right? Let's just share that before, for instance. So that is very helpful. just getting AI enabled with the smart locks, for instance, that's we've been doing that for a long time. It's not even AI. It's just a very basic form of automation. But that integration end to end will make your life much, much easier. What I'm noticing as well for the forward looking people, maybe there are some business owners that have property management companies or construction companies or some other ones, um, is that in private equity, they're paying a higher multiple for the companies that have AI integrated inside. So it's not just about, okay, I'm going to be left out, right? For people that are not fear-based decision makers, it's also greed-based decision maker. If you integrate AI, your company will have a higher exit. So that's the way that we think. Because we're not thinking about selling right now, but who knows? Maybe the right offer comes, and we may take it. So that's one of the important things to understand.
Georgie, I love that, man. You talked about from a, basically eyes in the sky perspective, especially when you're doing development. And as you were talking, I was thinking about a couple flip projects I did back when I had my W-2 job. And they were a nightmare for me, mainly because I never knew if the crews were there. They always left early, and I would have to leave the office from downtown Chicago, drive to, the Northwest side, see what work has been done for the day. It was just a nightmare to try to stay on top of it, right? And I know so many people in the asset management space. That's one of the biggest challenges is just make sure people do what they say they're going to do. Materials are ordered, shipped, delivered. Nothing gets stolen, all that kind of stuff. But on the flip side of that, you started talking about just the resident experience or the tenant experience or the guest experience, where things are automated. Things are you're anticipating questions, and you're starting to just learn how to provide a better experience for these individuals. And you can look at it one of two ways. Maybe this isn't the cup of tea for everybody, but it can either be fear based, where you're fearful that everyone else is going to use this technology and run past you and you're going to get left in the dust, or it's greed based, where you recognize this is a way to amplify your business, make more money, increase the value of the not just the assets you have, but your company overall. So think about this, because at the end of the day, it's all about investing and trying to make sure that you are getting the results you're looking for in your business, whether you work with investors or not. Technology is here to stay. So the best you can do is learn how it can make your life easier. And you are one of the guys who are out there doing it. You got your company Noonshot, and we'll make sure we put a link to that in the show notes. What's the best way for folks to reach out and get in touch if they have more questions or want to just connect with you?
Yeah, they can message me on LinkedIn or Instagram. My LinkedIn, we may add the link, but it's just my full name, Georgie Marrero. And then my Instagram is Georgie MH.
There you go. Love it. Well, Georgia, great stuff today. Hey, listeners, listen, if you want to learn how to leverage AI and technology, these are the kind of conversations we're actually having in the Best Ever community. So make sure you check us out there. Ask, your questions about how to leverage this for your investments. And, the other thing is we got the Best Ever conference coming up soon, too. So February 18th through the 20th, 2026 in Salt Lake City. Get your tickets there. This is another topic we're going to get into is AI and technology. And again, learn from guys like this to figure out how we can make our portfolios work harder for us so we have a little bit more time doing the things we want to do with the people we want to be with. Listen, this is Multifamily Mastery here with John Casman. Thank you for checking out today's conversation. And if you enjoyed it, share this episode with someone who might like it, family member, friend, whoever. But share this episode and make sure you like us and follow us wherever you are checking out this podcast. Thanks again for being a great guest. We look forward to staying in touch with you all. Take care and have a great rest of your day.